you're looking at your portfolio right now. Or maybe you're just staring at the dwindling balance of your checking account, feeling that familiar, nagging vertigo. You are being told the world is changing. You are being told some new artificial intelligence is going to redefine what it means to be human. Buy in now, the screen whispers, or be left to rot in the dust of the old economy. You feel the crushing pressure to believe in a profit, because the alternative, admitting that the math doesn't add up, is a reality too terrifying to swallow. But you are living in the shadow of a masterclass in mass hypnosis. Before the current crop of tech saints began preaching about the end of reality, there was a man who looked at a dirty office floor in Lower Manhattan and decided it wasn't real estate. He decided it was a religion, and he convinced the most ruthless people on earth to tithe billions of dollars to his altar. Let us open the case file on Adam Neumann. The year was 2010. The world was nursing a severe, collective hangover from the Great Recession. The financial system had been exposed as a fragile hall of mirrors. The great American career was a ghost. People were lonely, broke, and desperate for something authentic. Enter Adam Neumann. 6'5", a mane of rock star hair, and a gaze that could melt the cold, fiduciary heart of a venture capitalist. But Neumann wasn't just a landlord. He was a psychological hacker. He looked at the smartest, most aggressive investors on Wall Street and realized they all shared the exact same fatal flaw: FOMO. He knew that if you pitch a real estate company, they ask for spreadsheets. Pitch a tech religion, and they just ask where to sign. He took the kibbutz philosophy of his youth in Israel and weaponized it for the gig economy. He didn't just rent desks. He sold the we generation. But behind the incense, the neon signs, and the craft beer on tap, the forensic reality was bleak. At its core, WeWork was a mundane, high-risk play known as a duration mismatch. The mechanism was dangerously simple. First, the long bind. WeWork signed massive 15 to 20-year leases with actual building owners. They committed themselves to billions in future rent payments. These were cold, hard liabilities, written in blood. Second, the short flip. They chopped those floors into tiny glass boxes and rented them back to freelancers on month-to-month memberships. At its peak, WeWork had committed over $47 billion in future lease obligations. Meanwhile, its customers could simply pack up their laptops and walk away in 30 days. Neumann bet everything that his cool factor would allow him to charge a massive premium, while praying the economy would never cool down. In any other era, this is a subleasing business with razor-thin margins. But Neumann understood the dark art of narrative arbitrage. He knew that if he called it real estate, he'd be valued at a fraction of his earnings. But if he called it technology, he'd be valued at a massive multiple of his revenue. He didn't just trade floor space. He treated square footage like software. He convinced the street that WeWork was a physical social network, explicitly designed to elevate the world's consciousness. By 2017, WeWork was valued at $20 billion. That was more than the market cap of the companies that actually owned the steel and stone of the New York skyline. He was selling a dream of community to a generation of lonely workers and leveraging their desperation to build a private empire The hunger wasn't just his. It was ours. We wanted to believe in a tech messiah because the truth that we were just paying a premium for less space was too boring to handle. But the hunger of a messiah is never satisfied with mere billions. To keep the ghost in the machine alive, he needed a benefactor with a bottomless wallet. He needed the smoking gun. If Adam Neumann was the charismatic priest of this new religion, Masayoshi Son was the printing press. To understand how a glorified office rental company reached a desplosion, $47 billion valuation, surpassing the market value of Ford or Marriott, you have to examine the specific type of fuel being poured into the engine. In 2017, the rules of finance broke. Masayoshi Son, head of the Japanese conglomerate SoftBank, launched the Vision Fund. It was a $100 billion war chest, heavily sourced from the sovereign wealth of Saudi Arabia. It wasn't an investment fund. It was a gravity well. Neumann and Son met for exactly 12 minutes. 12 minutes was all it took for Son to tell Neumann he wasn't being crazy enough, and to hand him a multi-billion-dollar check. This wasn't capital. It was an accelerant. But here's the part that should make you uncomfortable. None of this required a scam. The system itself made it inevitable. When you have that much cash, you don't have to be profitable. You just have to be ubiquitous. SoftBank wasn't investing in a business. They were subsidizing losses. At scale. Billions in, billions out. With zero requirement to ever turn a profit. They paid for the privilege of losing money faster than anyone in human history. Their unit economics were upside down. Every new customer actually accelerated their losses. To hide this lethal cash burn rate from the public, Neumann and his accountants invented a new language. They reached into the ledger and performed a dark ritual of financial engineering. They called it community-adjusted EBITDA. Let's be clinical. In the real world, EBITDA is a standard metric to see if a business actually makes money. But WeWork's community-adjusted version was a forensic masterpiece of deception. Imagine opening a company's ledger and watching the biggest, most critical expense, rent, simply vanish. Not reduced, not optimized, deleted. As if a landlord just forgot to charge. They removed the cost of rent. They removed the cost of marketing. They removed design and construction. By deleting the very things that make an office company exist, they turned a billion-dollar hemorrhage into a profitable community. But the technical mechanism was only half the story. The true smoking gun was the sheer, breathtaking scale of the self-dealing. While Neumann preached about a world where we mattered more than me, his personal bank account told a different story. According to their S1 filing, the Messiah was actually his own biggest landlord. First, the circular lease. Neumann used WeWork's credit to buy personal stakes in commercial buildings. Next, the overcharge. He leased those buildings back to WeWork, effectively paying himself rent with his investors' money. Finally, the ultimate vanity. In perhaps the most cynical move in modern business history, Neumann trademarked the word "we" through a private entity he controlled. He then forced his own company to pay him $5.9 million just for the right to use its own name. Visualize that. $5.9 million. enough to pay the annual salary of over 100 of the community managers who were actually cleaning the beer taps and printing the key cards. He wasn't a CEO. He was a parasite, feeding on the host organism. The mechanism operated in 3 precise steps. 1. The valuation pump. Use SoftBank's billions to expand at a lethal loss, faking the hyper-growth of a true software company. 2. The narrative shield. Hide the massive operational losses behind community-adjusted metrics and distract everyone with talk of elevating consciousness. 3. The liquidity event. Try to go public as fast as possible, so early investors and the founder can dump their inflated shares onto you, the public, before the glass shatters. For years, the reality distortion field held. The kombucha flowed, and the vision was valued at $47 billion. But then came August 14, 2019, the day the music died. When WeWork filed their S-1 with the SEC, it wasn't a prospectus. It was a ransom note. Picture the scene. Forensic accountants sitting at glowing, multi-monitor trading desks across Manhattan, spilling their morning coffee as they scroll to the fine print. They didn't find a tech giant. They found a black hole, burning through $219,000 every single hour, every day, for an entire year. They found a CEO wielding God mode voting shares, giving him 20 votes for every 1 vote held by a normal shareholder. They found a company building a pyre. As the light hit the shadows and the walls closed in, the tech messiah prepared his final, most audacious move: the exit. The light didn't just dim. It went out with the heavy, final thud of a closing ledger. In September 2019, the reality distortion field hit the brick wall of the public market. The IPO was pulled. The $47 billion valuation didn't just drop, it evaporated like mist in a New York summer. By the time the world stopped spinning, that $47 billion had shriveled to roughly $8 billion. Eventually, in November 2023, the final bell tolled. WeWork filed for Chapter 11 bankruptcy. But in the noir of high finance, the villain rarely sees a jail cell. They see a private beach. This is the part of the story that should make your blood run cold. Because you are the one who ultimately pays the hype tax. While the company cratered, the tech messiah performed his final miracle: the golden parachute. SoftBank, desperate to scrub the stain of Neumann from their brand, didn't punish him. They rewarded his failure. The exit package was a masterpiece of moral hazard. SoftBank agreed to buy nearly $1 billion of Neumann's stock. They paid him a $185 million consulting fee for the simple service of leaving the building and never coming back. And they extended him a $500 million credit line to pay off the personal debts he'd racked up while playing visionary. Total it up. Adam Neumann walked away from the wreckage of his own making with a package worth roughly $1.7 billion. Meanwhile, the We generation was left in the cold. Just weeks after Neumann's payout was finalized, WeWork announced the layoff of 2,400 employees. These were the true believers. the ones who built the community. They didn't get billions. They got cardboard boxes. This is the cost to you. Every time a tech messiah uses cheap capital to distort a market, you lose. You lose because real businesses are starved of investment. You lose because the price of everything around you is inflated by the artificial heat of Ponzi-nomics. So here's the uncomfortable question. Was Adam Neumann actually a criminal? Or is he just the only guy who realized that Silicon Valley venture capitalists are the easiest marks in history? He didn't rob a bank. The bank handed him $1 billion and begged him to take it.
We beg you.
Who is the real fool? The man selling the invisible bridge, or the smart money billionaires playing into the greater fool theory? The glass offices of WeWork still stand, but the consciousness has been replaced by the cold, hard reality of restructuring agreements. Neumann moved on to his next billion-dollar play in residential real estate, proving that a reputation is just another thing you can adjust on a balance sheet. We live in an era of the next big thing. We are told to trust the visionaries, to ignore the math, and to join the movement. So when you hear the next founder promise that AI will change everything, ask a simpler question. Not what it could become, but what it earns today. Because the last time we ignored that question, it didn't just cost $47 billion. It proved something far more dangerous. That in modern capitalism, belief is often more valuable than truth.